Hello guys, this is Jordan and it's time for our weekly review as it comes to Forex Delta. Now, since last week I was not able to record the weekly review for that given week. This week we're going to cover both of them, even though there aren't too many trades, so it's not a big deal in my opinion. It will take us just a few minutes, but again, most important part here would be to understand which filters to apply when it comes to a given signal. There are just a few basic principles that I'm using in my trading, and that allows me to have strict understanding of what's aggressive trade, what's a conservative trade. Okay? Now let's go back to the performance page. This is the website fxdelta.net. Under performance you see this table here, and inside the table of course you have the screenshots of exits and entries. You have the dates, symbol pairs, etc., all the information that you need. Our focus of course falls to the screenshots, but that's for you to also see if you need any of the other details to check. Now, we said the past 2 weeks which would give us the 10th, so we're starting from the 10th up until 22nd or so. That means up from here we're going to cover the trades. Dorian is the first one. We had a loser here, but let's go ahead and see what happened there. This is the 15-minute chart. I'll try to zoom in a bit. Okay, the 15-minute chart where we need to draw here. Just 1 second. Okay, we had a cycle to the downside. Now, there would be multiple ways probably for you, for some of the guys, to draw it, but for me this is how it looks. This is some sort of triple move to the downside. Of course, you can look at it this way. It would also be giving us the same idea. The main thing here is we got the divergence and the breakout. And now going back to the live chart, where is Dorian? Right here. What we can see, I marked with the line the moment where we got the entry. What's the most important part here? First of all, we are in a bullish trend. That's perfectly clear, I guess, for everyone. Then we have bearish divergence on the MAs, which means we're expecting to see pullbacks and continuations. This is where we got this ABCD structure. Okay, this is on the 15-minute chart, the setup. So in other words, we already got the bullish hidden divergence. This is the second leg, or at least we are expecting to see second leg and continuation, not a further drop down. And that's the reason why the attack happened right there. Furthermore, we can see this fantastic level right here. Okay, and we're pretty close with the previous candle testing that precise level, so everything points in the direction of possible further continuation, and this is exactly why that trade was taken. As we said, it reversed and it crashed for the stop loss. Dorian. All right, next one, pound yen. We also had a buy here, and on the lower time frames we don't see much. Okay, we just can confirm that there was a breakout here to the upside, and the interesting one would be on the higher time frame. So this is what we got, guys. Okay, 2 waves up and then a range, triangle, or call it as you wish, but the momentum remains bullish. So this is where the delta pattern appears, and right here was our 1-hour chart setup. Okay, we're at the bottom of this triangle or range, and we're expecting the price to push higher. Of course, we have the direction in our favor, so looking for this trade to be completed at least near the top. Whether it's going to actually break and continue higher, we don't know, but as long as the risk reward ratio makes sense, at least for the first target, that would be perfectly fine trade. And as you can see, the first target, having here a trend line on the top, the first target comes to the point where we're slightly below the previous high, which is important for us because we don't know whether it's going to stop, respect this trend line. So let's say we have something like this. We don't know whether it's going to stop and reverse for another push lower, right? That's why we want to be below the previous high. That's the idea. If you're buying here, for example, you want your targets to be around that zone, not above them. Okay, in this case it managed to push higher, it had the momentum, so the second target was also collected, which was good in our case. Then we have Aussie Franc, which was a sell trade, and this one is really interesting for one reason, because even though it continued to move higher and it invalidated the manual, actually lost, it failed for the manual part, which was the longer term trade. Based on the delta, okay, we managed to get the money out of this trade. So here we can clearly identify a 5-leg structure, which is also inside a bigger double wave. We have the bearish direction from the higher time frames, which is the 15-minute chart plus the 4-hour chart. So basically the 4-hour chart is telling us we are in bearish direction. And this is where we expect for this pullback to be over and for the price to continue lower in the higher time frames direction. First target collected, second one kicked out in break even, and now let's go ahead and see what we have. This is the situation, guys. Okay, this is where the huge drop plus the delta pattern appeared. This is where the hidden divergence appeared, and most of all the corrective structure that we were trading. So clear two waves on the 4-hour chart. This is perfect. Whether you're going to look at it as slightly below the 100 or just testing the 61.8, we have a two-wave structure. This is what it counts, at least in my opinion. So the 15-minute setup was somewhere around here, and as you can see, let's drop to that specific moment here. Okay, so that's the push. This is where we got kicked out in break even, let's say, and it managed to provide this move down. So let's say this is now, let me just remove it. This is the bigger ABC that we're going to be working with. Okay, so basically you have that, then this, and then that for one bigger corrective cycle. Also perfectly fine, but when you pinpoint the exact moment, time, and so on and so on and so on, boom, you manage to get money out of the small intraday moves as well. Okay, so Aussie Franc provided us with a few pips there as well. Then we have a few attempts on Aussie yen, which of them is, by the way, still open. When you see empty box here and no results, it means the trade is still running and still open, so keep that in mind. It's not a bug or anything like that. Aussie yen, first attempt here was again a sell. Pretty similar situation to Aussie Franc. We came to pretty nice level right there on the top. Now whether this is a 3-leg, 5-leg structure or no, up to you to decide. In my opinion, this consolidation here is enough for us to go ahead and measure it like that. Important part is on the top. On the top we have a beautiful pullback which created the false break and the divergence, and this is where the sell actually comes in play, right? this one immediately pushed higher, but let's see what do we have on the higher time frames. So push down, delta pattern formed, hidden divergence formed. Okay, and this is where the attack started, the first one. Then we had another attack, again based on this very same delta pattern, and this is where the second attack started. Why? And this is the interesting question, because as we can see, the pair is keeping below this trend line. It was looked at this at first, which meant breakout, and here we're expecting continuation lower. On the lower time frames, that trade here after the breakout was kicked out, and this is exactly the second trade, this one, right? Let's see where it goes to, right there. So after the breakout we get another divergence, and we are looking for sales right below this zone. Now there is another attempt here, which is at the very top this time, which again uses the very same idea, and the question is whether we're going to continue lower or not. This one could be now adjusted, come on, like this, and that's the new shape and structure that we're working on. In other words, as long as this level is holding and that trend line is holding, even a tiny push lower towards this supportive zone, the 7370 zone, should provide us with a one-to-one, which means target one to be in the pocket and then breakout or second leg higher and possible continuation lower. Okay, that's the idea. So this is about that one, and the last one is Dorian, which I'm going to cover very quickly. This is a 1 hour chart entry here on H1, and the idea here is very simple, guys. Actually not that simple, and that's why I would like to go ahead and discuss it. Here is Dorian. I will just remove everything and go to the daily chart, and here. So we have bullish momentum, and on the weekly chart, if you're following the Traders Academy co-op, you know that the idea here is a range. We touched the bottom, we're looking for pushes up. That range could also play the same role with the trend line, but overall this is the view, bullish. Okay, whether it's going to be to this place or one attempt higher, it doesn't really change much. And that's weekly. Then we go to the daily chart, where we had multiple divergences. Okay, and the most important part here is, let me increase it, that after these multiple divergences and the attempt to go ahead and break below this trend line, the pair formed hidden divergence here. Not sure if it's visible or not, but if you draw the line, you'll see that we have bullish hidden divergence. Okay, so it is aggressive setup in my opinion, because we're already going against multiple divergences, and this is the part I really don't like. But the overall structure here means this attempt is definitely worth it. And then when we go to the 1 hour chart, we see that after the breakout here, we have another divergence which was broken, and that means we're looking at strong bullish momentum. Breakout, holding above, breakout again above the newly created structure, and continuing higher. Now again we can see the pair is trading inside this flat move, flat correction, and that tells us possible continuation higher. It created the momentum on the 1 hour chart, and I'm expecting it to continue higher. Since the stop loss here is absolutely not acceptable. It's too wide. I know it's only 46.50 pips, but when you compare it to the previous moves that we had, it's too big. Okay, look at where the target one is. What does that mean? As soon as we get divergence here, I think it would make sense to go ahead and move the stop loss to that place or to that place. If you move it to the top, to the entry zone, that would be choking the trade a bit, which means possible pullbacks might kick you out of this trade. And if you move it here, you will decrease the risk by half. Okay, almost by half, let's say, like 40% or so. Which way you would like to go with, up to you. Are you going to use that management at all? Again, up to you. But in my opinion, it's worth protecting the capital in this case because we have unclear view. We're currently trading around strong levels, and that could turn into a ranging situation, which means it's better for us to go ahead and get out immediately as soon as we get signs against on the lower time frames, such as the 1 hour chart. So that would be all, guys. I invite you to join our Telegram group. It is completely free. Plenty of materials are shared there, including trade setups on daily basis. You can find the links below, and of course, if you like these videos, show your support by hitting the like button and sharing. Thank you for watching. Have a wonderful week.